Hello everyone. Today we are discussing about straight line method of providing depreciation. In the last class we have started the chapter depreciation, and there we have discussed how to calculate depreciation and which are the objectives of providing depreciation and what are the similar terms to depreciation. Now we are going to discuss what are the various methods of providing depreciation, and out of those different methods we will discuss today what is straight line method of providing depreciation and how we can solve a question according to straight line method of providing depreciation. So which are the methods of providing depreciation? Let us discuss that first. Methods of providing depreciation. There are around 10 different methods are there for providing depreciation. Out of that we will just point out some of them. First one is Fixed Installment Method. Fixed Installment Method. Next one is Diminishing Balance Method. Diminishing balance method. Another one we can say annuity method. Then sinking fund method. Then machine hour rate method. Okay, let us discuss this one. We are limiting here for by discussing 5 different methods. Fixed installment method. In this method, every year a fixed amount of depreciation will be written off throughout the life of the asset. Diminishing balance method. In diminishing balance method, we will write off a certain percentage of depreciation in each year based on the opening balance of the asset. For example, first year the value of the asset we purchased is 1 lakh. So out of that 1 lakh, first year we have written off 10%. That means 10,000 rupees written off. Next year it became 90,000. Next year, 10% of 90,000 will be written off. That means 9,000 will be written off. Then third year, opening balance will be 81,000, and that year we will write off 8,100 rupees. Okay, so like that it will be written off. That is the specialty of diminishing balance. Like that, annuity method is there, sinking fund method is there, machine hour rate method is there. These methods are not there for us to study. Now we have to study these 2 methods only in this chapter. Okay. Then before discussing these 2 methods, let us see what are the journal entries related to depreciation. What are the journal entries to be passed while purchasing the assets and entering depreciation. You may be knowing about the journal entries for purchase of assets, purchase and sale of assets. Anyway, we will start from the journal entries for purchase and sale of assets. So, purchase of asset, for purchase of asset, what will be the journal entry? Journal entries on purchase of asset. Purchase of an asset. What will be the journal entry? Yes, we will write machine debtor to cash or bank, or asset debtor to cash or bank. We can write here which is the asset, that asset will be written. Now for the time being we can write asset account debtor to bank. You can write bank or cash, but asset, the value of asset will be of a huge amount, a big lump sum amount. So normally instead of paying cash, it will be business may issue check or by means of any other payment directly from the bank. Okay. So this is the journal entry for purchase of an asset. Then what will be the journal entry for charging depreciation? For charging depreciation, what will be the journal entry? We know that depreciation is an asset, depreciation is an expense. Depreciation is an expense, and by charging the depreciation, the value of asset decreases. So since it is an expense, it can be shown on the debit side. So we will write depreciation account debtor to assets. Okay, depreciation account debtor to assets. Depreciation will be charged to assets. Then next, every year this is an expense, and this expense is to be charged to profit and loss account or transferred to profit and loss account. Isn't it? We have to write journal entry for that also. What is the journal entry for transferring depreciation to profit and loss account? What is the journal entry for transferring depreciation to profit and loss account? When transferring depreciation to profit and loss account, this depreciation should come on the debit side of the profit and loss account. Should come on the debit side of the profit and loss account. See, profit and loss account debtor to depreciation. Isn't it? Profit and loss account, in profit and loss account, while preparing the profit and loss account, you will come to know that in profit and loss account, all the expenses will be debited. All the expenses will be debited. So depreciation is an expense, this will be debited. So in profit and loss account should be debited. So what can be the journal entry? Depreciation account, profit and loss account debtor to depreciation. So we will write here profit and loss account debtor to depreciation. Okay. Then let us see one more journal entry. We have written on purchase of asset. This asset sometimes we may sell it either at the end of the lifetime or in between also there is chance of selling these assets. So what will be the journal entry for that? For the sale of assets. For the sale of asset, its opposite entry will be written because we will get the cash and the asset will go out. Cash comes in, asset goes out. Debit what comes in, credit what goes out. So what we will write here? Bank account debtor to assets. Bank account debtor to assets. So these are the journal entries in relation to what? Depreciation. Okay, first journal entry is for the purchase of assets, then for creating depreciation, then transferring depreciation to profit and loss account, then for the sale of assets. Okay, so these are the various journal entries. Now let us discuss an example of depreciation for calculating depreciation. So let us write an example here. On 1st January 2015, a company purchased a machine for rupees 90,000. and spent rupees 8,000 for transportation and rupees 2,000 for its installation. Okay. The machine is expected to have a lifetime of 10 years. 10 years, lifetime of 10 years, and will fetch a scrap value of rupees 10,000 at the end of 10th year. So this is the question with us. We are going to see that what will be the journal entries for the accounting of all these transactions. Say on 1st January 2015, a machine for rupees 90,000 is purchased. So what is the cost of the machine? That will be written as the purchase price. Okay. So the cost of the machine we have to calculate. Cost of the machine is not only the purchase price. It is not only the purchase price, but it includes all the amount which we spent till the machine starts its function. So 90,000 plus 8,000, 98,000 plus 2,000. Okay, let it be, instead of 90,000, let it be 1 lakh. 1 lakh plus 8,000, 1 lakh 8,000 plus 2,000. How much? 1 lakh 10,000. So 1 lakh 10,000 is the total cost of machine. That's what we have told that cost concept says that in accounting concept, cost concept says that all the assets are to be recorded in the books of account in its cost price and not in its purchase price. So cost price include purchase price plus all other expenses till the asset start its functioning. So 1 lakh plus 8,000 plus 2,000, 1 lakh 10,000. Okay. Then next depreciation. Depreciation is to be charged. How to charge? Depreciation we can find out. We have found out the depreciation with an equation. What was that equation? Let us see the equation for calculating depreciation. Depreciation is equal to cost of the asset minus scrap value or residual value divided by life of asset in years. So this equation we have discussed in the last video also. If you have any doubt, you can go through the video. Okay, it's a suggestion that before seeing this video, you can go through the previous video. Then it will be clear that how to calculate depreciation and how to write how to find out the cost minus scrap. This cost minus scrap is called depreciable value. Okay, and life of the asset in years, it is given here. How many years? 10 years. So depreciation we are going to calculate cost of the asset 1,10,000. 1,10,000 minus scrap value. You will get a scrap value of 10,000 rupees. 10,000. So 10,000 divided by 10. That means 1,10,000 divided by 10. So every year we can write off 10,000 depreciation. Suppose if we are following fixed installment method, every year we can write off depreciation at 10,000 rupees. So we will write here 10,000 depreciation method to asset. Okay, suppose this year, this asset, the machine became obsolete and sold for rupees 75,000 on 1st June 2017. So this became obsolete and sold. So in the first year we will write the journal entry bank asset account account to bank for purchase, and first year we will make the depreciation, or at the end of the year we will write depreciation to asset. That means on 31st March, 31st December 2015. Then in 2015 again we will make that journal entry. This depreciation should be transferred to profit and loss account. So once again in the first year, that means on 1/1/2015, first journal entry will be written asset account to bank. That means machine account to bank. Here instead of asset what we will write, we can write here machine. Machine to bank. And at the end of the year, that means 31st December 2015, we will write depreciation account to machine. In journal we will write the end, depreciation account to machine. Okay, so this on 1/1/2015, this is on 31/12/2015. On the same date, we will transfer depreciation to profit and loss account. So we can write 31/12/2015. Okay. So first year journal is over. Next year, that means on 2016, what we will write? Again we will write the depreciation entry. That is, this will be written for 2015 and 31/12/2016 also. We will write the same journal entry, depreciation to machine. And this entry also will be written on 31/12/2016 also. Same entry will be written. That is, depreciation is transferred to profit and loss account. Clear? Now, next third year what happens? This asset is sold. Sold for how much rupees? Sold for 75,000 rupees. So we can write bank account to machine. How much? 75,000 rupees. 75,000 rupees. Okay. Then this when will be the date of that journal entry? 30th June 2017. So 36 2017. Now we have to find out one more thing, whether the sale is at profit or loss. How can we calculate? It is easy to calculate. How? The cost of machine is, we can write here, cost of machine is equal to, or we can write, instead of cost of machine we have to write the depreciable value only. cost of machine. How much? Cost of the machine is 1,10,000. Okay, so 1,10,000 is the value of machine. Then from that, depreciation for 2015, first year depreciation, how much? It is 10,000, that is to be deducted. Then next year depreciation for 2016, how much? Again 10,000, again 10,000, and 2017 depreciation for 2017. 2017 is selling. So 2017 after 6 months it is selling. That means depreciation for half year is to be calculated. That means 6,000, 6 months it is there in the business. So we can write for 2017 10,000 into 6 by 12. That means 5,000 is to be deducted. So how much is to be deducted? We have to deduct total amount 1,10,000 minus 25,000. So we can write 25,000. $85,000 is the value of the total cost of the asset. Total cost is 85,000. We sold it for 75,000. That means this is the book value of asset. Book value asset on the date of sale. On the date of sale, the book value of asset is 85,000 and we sold it for 75,000. So profit or loss? Sale price is 75,000. Our value of asset is 85,000. So we have a loss. How much? 10,000 rupees. So what will be the journal entry for the loss? Loss also is to be transferred to profit and loss account. That means it will be shown in the debit side. So we can write here profit and loss account debtor to machine. How much? 10,000. Is it clear? So this is the journal entry, and on 31st December 2000, this will be prepared. A profit and loss account will be prepared on 31/12/2017. 2017, because year ending only we prepare the profit and loss account. And at the year ending we can write depreciation also. Depreciation for 2017, how much? 5,000 up to the date of sales. Okay, so these are the journal entries in connection with the depreciation. Now let us discuss one of the method of providing depreciation, that is straight line method or fixed installment method of providing depreciation. Straight line method of providing depreciation or fixed installment method of providing depreciation. The method says that every year a fixed amount of depreciation will be written off from the value of asset. Depreciation will be same throughout the life of the asset. A fixed amount will be written. That's why it is called fixed installment method, or otherwise called straight line method. Why it is straight line method? The line of providing depreciation is straight. That means every year the same amount will be written off. Okay, so let us see that how we can prepare the machine account under this method. So with the same example we can discuss. and we can make little changes here. So this one machine is purchased on 1st January 2015, let it be, and sold on 1st June 2017, and on the same date purchased another machine for rupees 2 lakh and decided to provide depreciation at the rate of 15% per annum. Otherwise, let it be 10% per annum. Okay. Then the question is prepare machine accounts. Prepare machine accounts up to 31st December 2018. 31st December 2018. This is the question. We are going to solve this question. So we know that journal entries of writing the depreciation. Now we are going to prepare machine account. See, this is machine account. Machine account, date, particulars, amount, date, particulars, amount. Now we purchased the asset. What was the journal entry? Yes, machine account debtor to bank. So machine account debtor to bank, we can write 1/1/2015. Machine account debtor to bank. How much? 1,10,000. That was the value. Okay. Then we have calculated depreciation. Here you can see in the case of second machine, depreciation is directly given. 10% per annum, 10% or 15%, whatever it is. If it is not directly given, we can calculate by following this equation, that formula. Okay. So here in the case of first machine, we have found out the depreciation with that formula and got 10,000 is the depreciation every year. So this is the depreciation in the case of first machine. Okay. Then in the second machine, depreciation is directly given and not given the scrap value or lifetime of the asset. In that way also it can be given in the question. Okay. So first journal entry is written. We can write the depreciation journal entry. That will be at the end of the year 31/12/2015 by depreciation. How much? 10,000 is the depreciation. Okay. Then we can find out the balance. The journal entry for both that means journal entry for that particular year is over. So we can balance the machine account. 1,10,000 Here also 1,10,000 minus 10,000. We can write 1 lakh. What it is? Same date by balance carry down. That will be brought down to the next year beginning 1/1/2016 to balance brought down 1 lakh. So what is the next January? So every year we have to create depreciation. So this year we have to write the depreciation. It will be written on 31/12/2016 by depreciation. How much? Straight line method. That means on the original cost we have depreciable cost we have found out 1 lakh. So this method is called straight line method or original cost method or fixed installment method. Okay. So 10,000 again we are writing off. Now the balance became 1 lakh. 1 lakh minus 10,000. That is 90,000 by balance carry down. Then 1/1/2017 to balance brought down. How much? 90,000. Okay, 90,000 is written. Next, this machine is sold. When it is sold, the machine became obsolete and sold for ₹75,000 on 1st June 2017. So on 1st June 2017 it is sold. The journal entry is bank account letter to asset. So it should be in the credit side. You will write which date? 30/6/2017 by bank. How much we have got? 75,000 we have got. Okay. And you can find out the depreciation also. Same way we can write the depreciation. How much? Depreciation we can write afterwards. Before that we can find out the loss. Isn't it? Loss, how much? We have calculated the loss. Book value at the rate of sale is 85,000. 85,000 and it is sold for ₹75,000. So the loss is 10,000. Loss should show in the profit and loss account debit side of the profit and loss account. So it should come here. That means 31/12/2017 by profit and loss account. How much? 10,000. This is what it is, loss on sale. Okay, that will be at the end of the year. So this same date we have another journal entry, but on the same date another machine is purchased. So in this same date we can write, before writing this journal entry on the same date we will write 30/6/2017. What it is? By to bank. New machine is purchased for 2 lakh. Okay, clear? Now here again we can write the journal entry for depreciation by depreciation. Depreciation how much? For the first machine there is 5,000 depreciation. 5,000 depreciation, you know, for 2017 we have calculated. Actually it should be 10,000 for the first machine, but it is there for us for half a year only. So 10,000 by 2 or 10,000 into 6/12, 6 months we have to consider. So that is 5,000 plus new machine purchased. 2 lakh into 10%. 2 lakh into 10%. How much? 20,000. So total depreciation for that year is 25,000. Okay. Now let us balance that amount. 2,90,000 2,90,000 Okay. So now what is left? This depreciation 2 lakh machine. Sorry. 1,80,000 is left. So we will write here on the same date by balance carried out. So first machine is sold, it is over. Out of that second machine, 2 lakh rupees machine came, is 20,000 depreciation deducted. So 2 lakh minus 20,000, 1,80,000. That only is left now. So that can be written here on 1/1/2018 to balance carried out. How much? 1,80,000. Okay. Then same day we have to provide depreciation. Same year, last date of the year, 31/12/2018 by depreciation. Again, how much? 20% of 2 lakh, that is 20,000. Then 1,80,000 minus 20,000, 1,60,000. You will write here by balance carried down. Then here next day, that is 1/1/2019 to balance brought down 1,60,000. So it is asked to prepare machine account up to 31st December 2018. So 31st December 2018 over and 19 balance we have. Okay. So that's all for preparing machine account. Then how it will be in depreciation account and profit and loss account? That's what we have to check. Okay. So now for understanding purpose, I am going to write here how it will be shown in the depreciation account and profit and loss account. Let us see that also. Okay. So let us write depreciation account and profit and loss account. How it will be shown in that. Yes. So here we have depreciation account and profit and loss account. Now let us see how to show the journal entries in these accounts. So in the first year 2015, at the end of the year 2015, we have written journal entry for depreciation. What was journal entry? Depreciation account debtor to assets. In the asset account it was credited. So in depreciation account it is to be debited. Depreciation account debtor to assets. So 31/12/2015 we can write to which was the asset? Machine. How much? 10,000 was the depreciation. Then same date it will be transferred to balance sheet, sorry, by profit and loss account. Profit and loss account, 10,000. So here is the profit and loss account. this journal entry is to be transferred here. What is the journal entry? Profit and loss account debtor to depreciation. So profit and loss account debtor to depreciation. To depreciation. How much? 10,000 is it. So this account can be closed. We can close that 10,000, no balance. Here also we are closing here. Okay. In profit and loss account, various other entries will be there, but for showing this particular item, we will prepare here profit and loss account. Just we are closing that. Then next year 2016, 31/12/2016 to machine. Again we will write how much? 10,000 depreciation. And same date it will be transferred by profit and loss account 10,000. That also will be closed. Okay, then that entry we need to write here 31/12/2016 to depreciation 10,000. That also can be closed. Then comes 2017, 31/12/2017. What happens? In that case, we have depreciation 5,000 for first machine and second machine 20,000. Total 25,000. So to machine 25,000. Then that year we have transferred that to profit and loss account by profit and loss account. How much? 25,000. Okay, clear? Now here 31/12/2017 we have depreciation to depreciation. How much? 25,000 is there, and here one more entry can be transferred to profit and loss account. What is that? Yes, loss on sale of asset. 10,000 is the loss, no? That is transferred to profit and loss account, no? So that can also be transferred. So on the same day to machine, because in machine account credit side we have written profit and loss account. So we have to write the account name here. Machine account. How much? 10,000. So total that year it became 35,000. Okay. So anyway, that can be closed like this. Next, one more year we have to prepare. So this can be closed 25,000. Here also 25,000 closed, and last year 31/12/2018 to machine. This time how much it is? It is 20,000. That means 10% of 2 lakh, and that 20,000 will be transferred to profit and loss account. Okay, here 2018 by profit and loss account. How much? 20%. So this 20,000 can be closed here. 20,000. Here also it will be closed 20,000. Then let us see profit and loss account. 31/12/2018 by 2 machine. to depreciation. 20,000. So this is the way of writing journal entries in profit and loss account and in depreciation account. Okay. So that's all regarding the preparation of ledger accounts in depreciation according to straight line method. Now let us discuss what are the advantages and disadvantages of simple that fixed installment method. What are the advantages and disadvantages of this depreciation under fixed installment method? Of straight line method. What are the advantages of straight line method? What are the advantages of providing depreciation under this method? First one, we can see that it is very simple and easy to understand. So it is very simple and easy to understand. You also felt that no, it is very simple and it is very easy to understand. It is very simple in its calculation and it is very easy to understand that how it is found out and how it is recorded, all the things. And next we can say that asset can be depreciated up to scrap value or zero. Asset can be depreciated up to scrap value or zero. What is that? What it says? See here, our asset value in the first case, the asset was the cost price of the asset was 1,10,000 and scrap value was 10,000. So the depreciable cost was 1 lakh. So every year we are writing off 10,000. So at the end of 10th year, what we will get? From 1,10,000 we are writing off. From the 1,10,000 we are writing off depreciation every year. So at the end of 10th year, what we will get? 10,000 rupees we will get. That 10,000 rupees is the scrap value. Okay. So suppose if the asset, the value of asset is 1 lakh and there is no scrap value and depreciation we are writing off the fixed amount every year. So at the end of the year, the value of asset will become 0. Okay, that is another important advantage. Then we can say the next one, every year the same depreciation will be charged to profit and loss account. Every year the same depreciation will be charged to profit and loss account. Every year the same amount of depreciation will be charged to profit and loss account. We have seen that by preparing the profit and loss account. And what is the benefit here? Yes, we can predict the profit in advance. If all other expenses we know, we can predict that what will be the profit, actual profit. All other items of expenses are not. If we know, we can predict that what will be the profit. Because after deducting all those items, we can deduct depreciation also. Depreciation every year it will be same. So we can predict the profit. That this year what will be the profit. So that is another important benefit. Then the third is suitable for the assets whose useful life is estimated accurately. Okay, suitable for assets whose useful life can be estimated accurately. That means this method is suitable for the assets whose useful life can be estimated accurately. That means in advance if we can find out how many years this asset can work with the business. In such cases, in such assets, this method is very suitable because we can easily identify that how many years the asset will work, and after that how much money we may get as scrap value. In that case, this method is very useful. So these are our advantages. Then let us see the limitations or disadvantages. Certain disadvantages also are there for this method. First one is that this method is based on a faulty assumption that same amount of utility will be there for the assets every year. That we can mention here faulty assumption of same utility for the assets every year. So this asset says, or this method says that asset will have the same utility every year. Is it right? Same capacity will be there for every year for the assets. In the first initial years, capacity of the asset will be more, its efficiency will be more. When it comes to the last years, the capacity of the asset may decrease. Isn't it? That means the efficiency of the asset may decrease in the last years. So every year, the efficiency of the asset may not be same. So in that case, this method is not suitable. When the capacity or the efficiency decreases, accordingly we have to change the amount of depreciation. Okay, so that is not considered here. And another important limitation is that total amount of depreciation and repairs. So depreciation, total amount of depreciation and repairs charged for the assets will not be equal. That means, see, depreciation we are charging for the asset, like that asset will have repairs also, repair expenses also. So in fixed installment method, depreciation will always be the same. Every year depreciation will be the same. But repair charges, year after year, repair charges will increase. So even if depreciation is a fixed amount, the total of depreciation and repair charge will be increasing every year. Increasing every year. But in the case of next method which we are going to discuss, diminished balance method, in that case depreciation decreases every year and repair charges we know that it will increase every year. So depreciation increases, repair charges increases. So the total amount charged into profit and loss account for repairs and depreciation will be almost equal in that method. But this method is not equal. So that's all for today. We have discussed the method of providing depreciation. The first method of providing depreciation, that is straight line method or fixed installment method or depreciation on original cost method, and we have solved a question and discussed the advantages and disadvantages. So you can solve similar type of problems for calculating depreciation under fixed installment method from various reference books, okay, and solve it, and then you will be paka in solving various kinds of problems in this method, okay. and it is a sure question for the